Hello and welcome to the latest European car and light commercial vehicle production outlook, Analyst briefing by Ian Henry of AutoAnalysis on behalf of the SMMT. The economic signals are mixed at the moment. While the economy in general appears to be recovering, there is still uncertainty with regard to the situation in Ireland, Spain and Greece in particular. The fear of double-dip recession still stalks the region, but the German and French economies appear sound and robust. The EU finance ministers, the ECB and the IMF appear to have stabilised the overall situation, but some economists have raised concerns about the long-term future and stability of the euro. The scrappage schemes which boosted sales last year have come to an end, and this has led to a significant short-term fall in German sales in particular. Indeed, pan-EU sales in the period to August were down 3.5%, although several markets did see their volumes rise. The issue of overcapacity. This remains a serious worry in our view. The vehicle manufacturers, however, are reluctant to take the politically sensitive decisions to close plants. They prefer to cut shifts and slow down the line speeds. Two factories are closing, GM in Antwerp and Fiat's at Termini Imerese on Sicily, but elsewhere, at Jaguar Land Rover, at GM itself, at Renault and at Mitsubishi, questions remain about certain plants. But at the same time, investment in new production facilities continues. For example, Fiat is investing heavily in Serbia, and in the next few years we can expect to see the Chinese arrive in Europe in a major way. Turning now to the production volumes themselves, we saw the recovery in production starting in Q1, and this continued well into Q2. The H1 figures across Europe totaled 8.8 million cars and light commercial vehicles having been produced, compared to 7.3 million in H1 for 2009. And this volume growth in production was underpinned by strong exports and a raft of new models, and in turn this led to major improvements in many vehicle companies' finances. It was also boosted by light commercial vehicle volumes rising as well. The market in both July and August rose by 5.3% and 8.5% respectively. We are seeing a switch in production to smaller cars, the growth of EVs and hybrids, and this is now accelerating. As a result of this, despite the uncertainty, we still expect 2010 volumes to be up over those of 2009 at 18.4 million compared to 16.1 in 2009. There'll be a further recovery in 2011, and they should really begin to climb back, assuming no double-dip recession, from 2012 onwards. Turning now to individual car companies, first BMW and Daimler. Both German companies have shown strong volume and revenue growth in the first half of the year. BMW's revenue was up 18.3% year-on-year, and it's on target to meet some very tough financial goals, which has set itself by 2012. And this will be aided by a joint purchasing program with Daimler. It has a powerful new model program underway, and it's set itself a target of 2 million vehicles worldwide by 2020. It's growing its proportion of small cars, hybrids and electric vehicles in particular. A similar situation is apparent at Daimler, which will be very profitable this year compared to its heavy losses in 2009. Its H1 revenue was up 25%, more than BMW's. The reorientation of the company towards small cars at Mercedes is continuing, and this will be aided by a joint venture with Renault. Turning now to Fiat and Ford. At Fiat, the main news concerns the accelerating integration with Chrysler, the move of production from Poland back into Italy, a move encouraged by the Italian government, and the commencement of investment, 800 million euros in total, 300,000 unit plant in Serbia. At Ford, the main news has concerned the completion of the sale from Volvo to Geely and the delay in the start-up production of the second model at Craiova. This delay has been put back 1 year. GM, Honda and Hyundai Kia. The new GM appears to be strong and well funded. It's allocated a new model to production at Eisenach, it's expanding engine production in Hungary and Germany, it's increased investment in Poland. One question mark at GM is the future of the Luton plant here in the UK, but this should be resolved soon. At Honda, we can report that UK and Turkish production arrangements will continue as now for the foreseeable future. At Hyundai Kia, a third shift has been added in the Czech Republic. Its new Russian factory is now open with full production from early next year. And soon Hyundai Kia will have 1 million units of annual capacity in Europe. Mitsubishi, PSA and Renault-Dacia and Nissan. Mitsubishi, there's a production shift to Russia with the joint venture with PSA, but there is a question mark about the long-term future of the Born factory in the Netherlands. PSA and Renault, they have seen their financial position much improve, and both companies will repay French loans from the government early. PSA is deepening its cooperation with Mitsubishi, particularly in the area of electric vehicles. It's also launched its successful DS premium brand for Citroën. Renault is focusing purely on EVs. It's not doing anything in hybrids. It has its joint venture with Daimler now underway as announced. And Nissan will report record production in the UK in 2010. And Dacia's success story continues with rising production. Tata, Jaguar Land Rover, Toyota and Volkswagen. Tata's plans to close a UK plant are now under review following a recent upturn in Land Rover sales, and indeed there's a new model program underway at Land Rover, the first of which sees the Range Rover Evoque launched recently at the Paris Motor Show. This has led to increased employment opportunities, and we can see more Range Rover branded products in the next few years. There will be CK production in India by the end of this year, and production in China within 3 years is also expected. At Toyota, the company is no doubt still recovering from the recall problems which affected it earlier in the year. In the UK, Auris hybrid production has started, and the company has recently confirmed that a second hybrid model will be made in Europe. This will be made in France, and we assume at the moment this will be a variant of the new Yaris. Showing some signs of recovery, Toyota has also mooted the possibility of expanding its Russian plant and widening the product range made in Russia. Volkswagen, this substantial group, has seen group sales rise and investment continue across the world, not just in Europe. Year-to-date sales in August were up 13.4% globally, although Europe itself was down 2%. Additional capacity is now being sought in Russia. Volkswagen's new plant at Kaluga with 150,000 units of annual capacity has been deemed to be insufficient. Audi has already decided it has to increase production capacity of the A1, and it will export the vehicle beyond Europe. Originally the plan was just to sell it in Europe. The company has a major problem though at Sept, and VW has given the company 5 years to sort itself out. Whether it will achieve this remains to be seen. In conclusion, there's no doubt that 2010 will see a rise in production over 2009, and this is largely boosted by a raft of new models. Of course, our outlook assumes no double-dip recession, and for now we remain cautiously optimistic, but we're very wary of the mixed signals that are coming from the economy and from the industry in general. As I say, growth has been underpinned by new models from many manufacturers and boosted by exports beyond Europe, and furthermore by its gradual switch to smaller cars at most vehicle manufacturers, particularly the German premium cars companies. Europe's financial problems appear to have been averted and solved. However, the concern has been raised about the future of the euro's integrity. We still have concerns about the overcapacity issue not being addressed. We see decisions being delayed rather than being taken. In terms of the individual vehicle companies, to recap, BMW and Daimler are switching their focus to smaller cars and adding EVs. Daimler through a joint venture with Renault, BMW mostly alone. Fiat's integration with Chrysler is continuing and is expanding production outside of Italy into Serbia. Ford has finally signed new Focus and C-Max. GM is expanding both engine capacity and production of vehicles in Poland. It's confirmed production also of a new model for Eisenach. The picture for GM is rather more buoyant than it was a year or so ago. Honda's production lineup will remain in place unchanged. Hyundai Kia continues to grow both in the Czech Republic and now in Russia as well. PSA is going to establish an EV business both alone and with Mitsubishi, and in addition both PSA and Renault have started to repay their government loans early. Nissan will have a production record we expect in 2010 in the UK, and Dacia's expansion in Romania and indeed at a new plant in Morocco is continuing. Tata Land Rover, here we see a widening of the product range, particularly from Land Rover, but hopefully also from Jaguar in the years ahead, and production in India is beginning soon. Toyota, the main news concerns the second hybrid to be added to the European production portfolio in France. Volkswagen is still performing very strongly. It's expanding its Audi engine and car production range, and assuming it can deal with its problems at Sept, will be a very powerful force in the years ahead. The European Car and LCV Production Outlook report is available to download for SMMT members from the website, and details are shown on the screen now. Thank you for listening.